program is brought to you in part by Intact Insurance Company. You're back.
So equities continue to move higher here and stateside, but some are calling for a correction. Others think there's only room to move higher. For his take on the markets moving through 2011, we turn to Jerry Brocklesby, president at MarQuest Asset Management. Jerry, good to have you with us.
Hi there.
All right, so we've got the TSX at a level we haven't seen since July of 08. The American markets are also at 32-month highs or so. Is the trend our friend, or does it end?
Oh, I think it's a long way from being over, Michael. I know there's a lot of calls for corrections now, and corrections tomorrow, and corrections 3 weeks ago. Our view of the market is just going to rotate its way higher. Maybe pause a little bit, and then correct, but sector after sector will move it up higher.
So what's the strategy then? Is it buy on weakness, or is it sell on strength?
I think it's just pure stock picking. At the end of the day, you know, I think the market, we've been expecting the market to move constantly higher from last summer, and we think it's still going to continue to move that way. The major driver we think is going to be the OECD economies late this year, early next year, are going to come alive and start growing a little faster. And at that time, we'll have coordinated growth by both the emerging markets and the OECD economies.
With the OECD economies turning around, I suppose that's more of a sentiment thing than it is a fundamental driver for markets.
Well, certainly psychologically. I mean, we're all still recovering from what happened a couple of years ago, and that's taken a long time to heal, and it will take a much further time to heal as well.
All right, so you call this a stock picker's market. So are you taking a bottom-up approach or top-down? You're starting at sectors and working your way through that.
Well, the top-down we think is pretty straightforward. The worst is behind us. The economy is getting better in front of us, so I don't worry too much about the market. Then it's just a matter of sectors and stocks. We still believe that the resource sector is still the champion leadership that it's been and will continue to be for some time to come here.
And what's the underlying fundamentals that will propel resources higher? And are you talking specific commodities within that space?
Oh, I think the commodity sector in general will continue to perform well. I think the emerging markets will continue to grow. That, coupled together with the recovery in the OECD economies, will create, I think, further demand and then supply-demand issues in terms of shortages, for example, in copper.
We asked you to give us a couple of picks.
Yeah.
You said you had some gems. And they're venture exchange gems.
Yes.
These aren't even, big board plays. Why are you playing in that space?
Well, here's the basic premise. In the resource sector, there is an issue about availability of supply, and a lot of the larger corporations have to buy and acquire smaller cap ones to get their internal growth rates to move forward. And so I think a lot of the smaller and mid-sized companies that are developing good deposits are prime takeover candidates.
You like Chieftain?
Chieftain is a very, very unknown at this stage stock. It's a deposit in BC. It's zinc, copper, gold, and silver. It is actually a takeover situation we helped finance last summer of an old company called RedCorp, which got into financial trouble, and we acquired the asset very cheap in the company, and now they've just got their final permit. They actually got the permit transferred from RedCorp just recently, which is a long way to de-risking the development of the deposit, but it's a very rich deposit, which I think, given the cap of the company, which is about $65 million, is very cheap.
What do you think cash costs ultimately end up being for the gold component? Because when you talk about all those other ores, all those other metals as well, they often get displaced in the mix.
Well, it's not really a gold deposit, but it has gold and silver byproducts. And in fact, the gold and silver byproducts is a way they may finance the development of the mine,
right,
which is really a zinc copper mine. But it's a mix of a bit of everything.
Well, we're going to be speaking with the CEO of Exploration Orbite a little bit later on, and he went, "We love those guys." Why?
Well, we invested in the company last fall. This is an extraordinary story. This is all about the clay deposits in the north part of the Gaspé, which we've known for many, many years contains about 20-25% alumina, which is the source product for producing aluminum. And the problem with those deposits was you could never figure out a way to extract them, and they have.
If you ask him one question, what should it be? What should I be asking him?
Ask him to explain. He probably won't tell you the secret because it's patented, but explain how he developed that technology to extract the alumina. That you might be interested in that, but what I'm most interested in is the financial side of this.
Yes.
The financial side of this is really compelling. It looks like they have about $150 a ton benefit or lower cost than bauxite source. They also have $100 a ton transportation advantage. Remember, the smelters are just across the river.
Right. Great having you with us, Jerry.
Yeah.
Thank you.
Thank you.
Jerry Brocklesby, president of Marquest Asset Management. For further market analysis, join us tonight on Market Call tonight at 7 p.m. Eastern. Derek Webb of Webb Asset will be taking